All right, everyone, we're going to look at SentinelOne stock today, and it is down big after hours. According to StockTwits, it's to do with their gross margin decrease in compression. I like to do a few things when we look at these stocks. My goal is to give you guys more information for you guys to decide if you want to be bearish or bullish on it. And hopefully I can find something that you guys didn't know before and give you a little more information as you're making these decisions. That's kind of what I'm going for. So I typically look at the latest earnings. I'll look at some of the valuation metrics, kind of what it is, maybe some other things to consider, dilution, share count, all those sorts of things. So we'll start with, and then I'll also do this. I'm not claiming to be an expert on the stock, nor am I claiming to know what is going to happen. I don't. But I try to give you the best picture for you to make that decision of what you want to do. The first thing that I think is interesting about this is that this is cybersecurity, and Wall Street is obsessed with everything AI, data center, memory centers, everything. And I think that cybersecurity that sector will be a beneficiary of this. FTNT, Fortinet, was another one I was looking at earlier. And I think that this wave of just Wall Street money, just mass money will continue to come to and keep coming to, I think, cybersecurity. So I think it's in a good sector. The other thing I wanted to point out is that these institutions are buying pretty heavily over the past couple quarters. That's a lot. The institution percentage owned went from 80% to 88% in a couple of quarters. That's massive. There are insiders buying. There are insiders selling, but there's a lot of stock-based compensation for this stock. I think it's like 300 million stock-based compensation. And that makes their free cash flow and operating cash flow positive. But it's at the expense of share dilution and share count. I want to say the share count has increased like 5% over the past few months or whatever, 6 months. So it's something to watch for, but still there's buys here. Nothing here that I thought was interesting. These financials, first of all, these financials are weird because this has like a fiscal year going on. So it's going to look weird here on Moomoo. But the main thing that I wanted to point out is that, you're looking at, yo dude, what's up? Dude, I'm looking at SentinelOne right now. Yeah. Yo, we're at cybersecurity. That's what we're talking about this one. But the main thing that I would watch for this is, this financing cash flow. They were diluting pretty heavily, but they're not doing it as much recently. But as long as they're doing the stock-based compensation, they're always going to have, some dilution. And so this statement of cash flows right here, when you're seeing this, the free cash flow being positive, it's partly because of that stock-based compensation. So, but if we just look and focus at the gross margins, which is what Wall Street really didn't like here, or at least that's what StockTwits is claiming, you're seeing this gross profit, basically stay flat. And I guess people didn't like that. And again, this is weird. The fiscal year is throwing these numbers off, so I'm not going to spend too much time on this. But we will look at the valuation here real quick. And you can see, according to price to sales, it's pretty low to where it has been historically. We're going to only look at price to sales because technically it's not profitable yet. I mean, it has a free cash flow, but the reason why I say it's not technically profitable is because after all of these operating expenses eat up all of their gross profit. So it eats all of that up. So their operating profit is negative and has been negative for a while. So we're going to look at price to sales, and you can see here their ranking according to the peers isn't the greatest. It's near the bottom half, so that's something to look at. It's a little higher than maybe what it should be for the peers, so something to watch for that. Analysts, I mean, does analysts even mean anything? I don't think it does. And I'm trying to see if there's anything else that's kind of interesting here with this guy, but I think those are kind of the main ones. The share count. Yeah, here's this fiscal calendar year. What was some other stuff that I was looking at that I thought was interesting? Yeah, firmly free cash flow. But then, yeah, here's this, 300 million stock-based compensation. So that's kind of what's going on, but they have plenty of cash. They're not gonna go run out of cash anytime soon. So, this one is interesting, and I don't know, kind of my main takeaways is that I like that it's in the cybersecurity's place. I think that's a good place to be. I do like that they have still been growing, but you have to ask yourself, is this kind of the I do think this is a good sector to be in. Is this the stock to represent that? So I hope, I want to see if there's any other thing I can dig out for you guys, to maybe help in your decisions here. Again, this institutional activity is very interesting. The valuation is not the best when you compare it to peers. And then you're struggling with, you're going to need to keep diluting the share. You're going to need to keep diluting the stock to pay your employees. How has the shares outstanding changed for S stock over the past 3 years? It's definitely going to be increasing. So, something to watch for. Yeah, year over year, six, pretty consistent increase. So normally you'd like to see growth overshadowing that. But great sector. It's in a great sector. Cybersecurity, the demand for that is just going to go up. So it's all about the competition, the other companies that they're dealing with. So, let me know what I maybe am missing, what else people could consider. I want to do my best to give you guys as much information that I know how to give as possible. And I will see you guys in the next